Welcome back, tech enthusiasts. Today, we're diving into the cutting-edge world of technology giants, analyzing four major players that dominate the software and cybersecurity landscape: Adobe Inc., CrowdStrike Holdings Inc., Microsoft Corporation, and Oracle Corporation. These companies exemplify diverse strategies and financial strengths shaping the tech industry. Let's break them down metric by metric to uncover the story behind the numbers. The P/E ratio offers insight into market sentiment and valuation relative to earnings. Adobe has a trailing P/E of 23.34, significantly below its 5-year average of 37.65, which could suggest the stock is undervalued compared to its historical performance. Its forward P/E of 18.65 hints at expected earnings stability. CrowdStrike stands out with a trailing P/E of 92.73, reflecting premium pricing for its growth potential. However, this is below its 5-year average of 243.72, suggesting a tempered but still optimistic outlook. Its forward P/E of 81.94 underscores continued high expectations. Continuing, Microsoft boasts a trailing P/E of 35.40, slightly above its 5-year average of 33.98, signaling strong investor confidence. Its forward P/E of 28.39 demonstrates moderate optimism for future growth. Finally, Oracle, with a trailing P/E of 27.29, exceeds its 5-year average of 18.74, reflecting heightened market enthusiasm. Its forward P/E of 22.93 indicates ongoing confidence in its performance. Turning into the price-to-earnings-to-growth ratio that helps us understand growth relative to valuation. Adobe's price-to-earnings-to-growth ratio of 1.56 suggests fair valuation for its growth rate. In contrast, CrowdStrike, at 3.71, indicates a premium valuation, likely justified by its rapid expansion. Microsoft, with a price-to-earnings-to-growth ratio of 2.58, and Oracle, at 2.56, signal a moderate premium on their growth prospects. Insider ownership reveals management's confidence in their business. Adobe has 0.41% insider ownership, typical for a large corporation. CrowdStrike follows with 8.34%, showcasing strong insider alignment. Microsoft with 1.46%, while Oracle, at a striking 41.2%, reflects extraordinary insider confidence. Profitability is where these companies shine. Adobe's return of equity of 36.31%, return of assets of 18.53%, and return of invested capital of 39.35% highlight its operational efficiency. CrowdStrike lags behind with return of equity of 4.98%, return of assets of 1.86%, and return of invested capital of 5.27%, reflecting its early-stage growth focus. Continuing, Microsoft impresses with return of equity of 35.6%, return of assets of 18.69%, and return of invested capital of 30.36%, underscoring its industry leadership. Finally, Oracle outshines all with return of equity of 132%, return of assets of 8.22%, and return of invested capital of 15.19%, driven by its robust shareholder return policies. Over the past decade, Adobe and Microsoft have reduced shares at a -1.54% compound annual growth rate and -1.10% compound annual growth rate, respectively, emphasizing shareholder value. In contrast, CrowdStrike has increased shares at a 25.75% compound annual growth rate, reflecting capital-raising initiatives, most of all to afford the huge amount of investment to continue the company's impressive growth record. Finally, Oracle, with a -5.13% compound annual growth rate, showcases a shareholder-friendly approach and clear buyback program through the years. Now let's talk about earnings per share or EPS. Both current and projected EPS growth reveal future prospects. Adobe leads with an EPS of $18.42, projected to grow at 15% compound annual growth rate. CrowdStrike, with an EPS of $3.85, boasts a massive 25% growth projection. Microsoft's EPS of $12.12 is set to grow at a steady 13.74% compound annual growth rate. Oracle's EPS of $5.90, expected to rise at a 10.65%, reflects stable growth. Free cash flow per share is another crucial indicator. Adobe's free cash flow per share has grown at 24.16% over the last decade, with a current free cash flow yield of 4.21%. CrowdStrike's free cash flow growth of 125% and yield of 1.26% reflect consistent cash generation. Microsoft's free cash flow growth of 14.45% and yield of 2.28% highlight its reinvestment in growth, while Oracle's free cash flow growth of 1.5% and yield of 2.12% underscore not aggressive reinvestment, because most of growth comes from buyback programs. For dividend-focused investors, Oracle offers the highest yield among the four companies, with a 1.19% dividend yield and quarterly payments of 48 cents and 13.43% compound annual growth since 2014. Microsoft offers lower yields of 0.77%, but also has an impressive dividend growth rate of 10.38% over the last decade. Adobe, on the other hand, currently does not pay a dividend, but with a free cash flow payout ratio of around 20%, it could potentially introduce a 0.85% dividend yield with quarterly payments of 91 cents in the future, and an impressive 20% potential annual growth. Additionally, CrowdStrike also doesn't pay a dividend. A hypothetical payout ratio based on FCF yield would be a modest 0.26% dividend yield. Continuing with margin ratios, operating margin and profit margin that are key indicators of a company's efficiency and profitability. Adobe excels with a 36.36% operating margin and 25.85% profit margin. CrowdStrike's margins, at 6.98% and 3.39%, reflect heavy investment in growth, but an improvement is necessary in the near future if the company wants to compete with other tech businesses. Microsoft shines with a 44.49% operating margin and 35.61% profit margin. Finally, Oracle, with 31.47% and 21.16%, highlights strong profitability in a competitive market. Adobe, Microsoft, and CrowdStrike show strong positive revenue and earnings evolution, reflected in their market performance relative to the VGT Tech ETF, except Adobe, who lagged far behind them. In contrast, Oracle has experienced flat revenue growth but still outperformed the ETF in total returns. Debt is an important consideration when evaluating a company's financial health. Adobe demonstrates low leverage with a debt/EBITDA and debt/FCF of 0.76. CrowdStrike balances moderate leverage at 2.01 and 0.75, respectively. Microsoft, with 0.48 and 0.92, highlights excellent financial discipline and is to be mentioned as one of AAA credit rating companies. Oracle, at 3.83 and 9.09, reflects higher debt due to aggressive expansion and to be more cautious if in the future is not able to reduce this high level or there is a change in free cash flow growth. When looking at stock price performance over the last 52 weeks, Adobe's price fell by -27.87%, suggesting potential value at its 52-week low. CrowdStrike gained 29.22%, reflecting growth optimism, despite huge downside last year to $200. It was a great opportunity. Microsoft rose by 10.16%, while Oracle soared 51.3%, showcasing its resurgence. All four companies are large companies with market caps over $50 billion. Now, let's talk about the crystal ball moment, analyst expectations and fair values. Analysts have set varying price targets for these companies over the next 12 months. Adobe has a price target of $575.06, representing an upside of 33.74% from its current price of $429.99. My fair value estimates tell a very different story. For me, Adobe is close to its fair value at $519.58. That suggests it is undervalued right now. Continuing with CrowdStrike's price target is $379.38, which actually represents an upside of 6.27% from its current price of $357, indicating that analysts see the stock as potentially undervalued. And for me, CrowdStrike, with a fair value of $180.35, appears currently huge overvalued. I don't see the expected growth enough to pay current prices. Now, Microsoft has a price target of $508.46, with an upside of 18.51% from the current $429.03. And for me, with a fair value of $385.44, can indicate an overvaluation of this company but also a good entry point. Finally, Oracle's price target is $196.55, representing an upside of 22.06% from its current $161.03, with a fair value for me of $155.45, which is close to the current price and can indicate an excellent opportunity to start a position. These valuations indicate that while there is some potential for growth, investors should tread carefully and consider these stocks' current pricing relative to their intrinsic values. So, there you have it. Each of these tech giants has its own strengths and weaknesses. From Adobe's efficiency to CrowdStrike's explosive growth, Microsoft's consistency, and Oracle's shareholder returns, each company presents unique opportunities. Always align your investments with your goals, and as always, do your due diligence. If you enjoyed this breakdown, don't forget to like, subscribe, and hit the notification bell for more financial insights. Until next time, happy investing.